Well, welcome to the Business Insurance Zone. My name is Eric Palmer, and in this series, we're going to take a look at long-term care, or what we're calling extended home care. And we're going to break it apart into three major demographics and look at how these products apply to the demographic, why we need to be paying attention, and we're going to explore, of course, the myths and the facts about these products as it relates to these folks. And with me to talk about this is Leni Cohen, the guru, the expert here at Brokers Alliance in long-term care. Leni, welcome to the show.
Thank you very much.
Now, Leni, I'm glad to have you here because, your background really is examining not just how these products work and taking a look at, of course, what to do with those declines and those impaired risk cases, but you also take a look at the demographics and how to market into different groups. In this particular episode, what we want to do is talk about the 20 to 40-year-olds, and this is my favorite demographic because it happens to be the group that I sit in. And I think that the first thing that I'll admit is I make a major mistake. I think of long-term care, I think, well, when I'm older, I'm going to buy this product. It seems to me that we kind of think about it for something we're going to need when we get over age 50 or 55. Why is that a mistake?
Because today there are two interesting things going on. People are living longer, and 20 to 40-year-olds are actually seeing the financial and health issues that their parents and grandparents are going through. Okay?
And when we think about it, we think about major diseases, right? Long-term care is for Alzheimer's.
Correct. They look at long-term care needs for the older adults who they consider having Alzheimer's, Parkinson's disease, strokes, but they fail to take a look at what happens in their age category, 20 to 40. Work-related accidents, sports injuries, MS is something that occurs in 30 and 40-year-olds, strokes, heart attacks, cancers. These are things that are happening to younger people.
Right.
And what happens is we talk about the myths and facts, and there are lots of myths that 20 to 40-year-olds have in their minds. And so what I'd like to do is dispel those myths and talk about the facts.
Well, absolutely. I think, first of all, the takeaway at the beginning here is we're calling it extended home care. Get away from the long-term care terminology. If we all have this mindset that long-term care represents an older demographic, then you're not going to have very much success getting into the younger groups talking about it. Let's call it extended home care. And the very first myth that we want to talk about is, I think the biggest one, it's one of the ones that I even had, of course, before I met Leni and I became more educated about long-term care and extended home care. Health insurance and disability insurance is going to cover the extended care needs. Why is that a myth, and is it true or false?
Well, the fact of the matter is the 20 to 40-year-olds do have health insurance from work or individually, and they may have disability insurance. But the fact of the matter is that health insurance covers doctors and hospitals, possibly medication, all skilled types of care. But it doesn't cover what 99% of all extended care is. As a definition, extended care is any need that arises from an unexpected health issue that takes you out of your daily living, out of work, out of earning an income for 3 months or longer.
Right.
And it really disrupts work, it disrupts the plan you have in place. So they need to understand that the health insurance is about skill, that disability insurance is really not about extended home care. It's about covering overhead if they should be out of work.
That's actually really interesting because, again, you don't think about, well, I'm just going to be out for a few months. What happens to that paycheck that you're living on? And most people in that age demographic are
Correct.
still living paycheck to paycheck. To lose 1 or 2 checks could be crucial and potentially even cause you to lose your home, not be able to meet your bills and your expenses.
Right.
Now, this next myth is one that I really like as well because it leads into what we just got done talking about, but it's, I'll never actually need long-term care.
Okay, so you can assume that a 20 to 40-year-old should take the risk. The fact of the matter is 43% of all long-term or extended care events occur under 65. So if you choose to take the risk, that's fine. But what happens if you do fall into that category and do need extended home care? Then suddenly that 40% escalates to 100%. You are in the heat of the situation and you're 100% in need of care. And the places that you have to look are your spouse who may have to leave work,
right,
your parents who may not live close by.
Right.
So it really puts you, it escalates the percentage at that point.
What's interesting is the frequency that we're talking about here. Now, this chart that I pulled up behind us on the screen is something that's available, one of the many pieces that you have on your website and that you can provide to our producers. Of course, if anybody at any point throughout the show, you're thinking, well, I've got a case, I've got a client, I've got somebody in mind that I can talk to, send an email to Leni. It's leni.cohen@brokersalliance.com. She'll be able to provide a lot of these materials, help you with this case. But what's interesting, in the last 2 minutes that we talked about is, first, I don't even need this insurance, or this is something that I need when I'm older. I'm not going to have any problems while I'm young.
Correct.
Talk about this chart, because this is really, truly interesting to me.
Okay. For a young adult, 20 to 40, they may own a home. If they own a home, they're going to need homeowners insurance. And it talks about the risk of a fire to your home, and the percentages are very low. When you move over to auto insurance, which you have to have if you're driving a car, the percentages go up a little bit.
Right.
When you go to health insurance, the percentages rise a little bit more. But none of these compare to the risk of an extended home care event.
So that's really, truly interesting to me. And if you can see on the screen, of course, you'll see the numbers. The odds of a home fire, 1 in 1,200. The odds of needing long-term care, 720 in 1,200. And I think what's interesting about this is we buy all three of these types of insurance. We have health insurance. We get it through our employers typically. Come soon, we'll probably get it in multiple different ways. We always have to buy our auto insurance. We have the hospitalization coverage. And then you think about the frequency or the possibility of needing that long-term care. I think this chart really seals the deal. And this is a sales tool. I mean, this really could be information that you could share with the client and say, you need to understand the frequency or the possibility of having an event is much more extreme than the other insurances you're already affording. So it's interesting, we've talked about, the frequency is obviously extremely high in the potential event that you would need some long-term care. And I think the young demographic is thinking to themselves, well, I'm young, I'm healthy. And really what's on their minds, and it's been on my mind, is long-term care is expensive. Let's talk about that for a minute. Why is the expense really a myth, especially with this younger group?
It doesn't have to be expensive, okay? The fact of the matter is, if you have an extended home care event, you're going to turn to your spouse, you're going to turn to your family members, and you're going to disrupt whatever plan they have in place. And younger people, 20 to 40, don't realize that they can purchase extended home care for $20 or less a month, which is the cost of a dental plan.
Absolutely. Well, $20 a month is significantly lower than even most health insurance and critical illness plans. So
Correct.
The idea that you can get some of this coverage for only $20 a month, I think that's a huge lead-in when you're trying to approach this demographic. So I guess the moral of the story here, folks, is that don't ignore the 20 to 40-year-olds. Change the way you talk about long-term care insurance. Lead in talking about extended home care. Let's talk about the frequency. Get your hands on some of these materials that Leni has available. Of course, if anybody has any questions or you have a case that you want us to take a look at, contact us here at Brokers Alliance. It's leni.cohen@brokersalliance.com. Leni, thanks so much for being on the show today. Take a look at the next couple of episodes. We're going to explore some more demographics. Thanks for tuning in with us here today, and enjoy the rest of your day.